Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we had some different topics on the last segment. We talked about Citigroup, some stock analysis there, and we started talking about Apple and the different opportunities that we have here at Online Trading Academy with Apple, and we had some people texting in for this free investing class. Congratulations to those of you that did that. We also have, if you want to look at some stocks coming up here in the next couple of weeks here, text the word investing and then that stock after that. So text the word investing to the number 210, and whatever stock that you want to analyze, and we'll try to do that on the next upcoming shows here by going through that and just the analysis. Hopefully it's an OTA pick so we can get some analysis from that as well, that service that Online Trading Academy has to help you make smarter investing decisions. Make sure to check out the live YouTube stream. You can just go to YouTube and type in Josh Lilquist. Otherwise, the podcast, Investing and Trading Live, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. So, Al, we were talking about Apple in that last segment, and there was a potential buy opportunity. And I had mentioned there's a lot of people looking for an income strategy with the market, but with stocks still technically priced pretty darn high.
Right.
It's almost pricing people out of it, so people think they don't have enough money. So with this Apple stock, without going into any real big details on what we're going to get into here, but what if somebody wants to have the opportunity to buy Apple at a discount? How would you do that if you don't have it's $145 per share? How would you do that?
Yeah, it's sort of like having an online discount store. You can use options to do that, and one of the problems with the stocks that we're talking about now, and what you see with companies like Google, Amazon, Tesla, Apple, they've gotten up to the point where they are out of reach for a lot of people unless you're just buying one or two shares.
One of the great things about doing live shows is you got to push record.
Ah, okay.
So we're going to give some people a double dose here. I'm going to press record on the recording here, and we're going to start over. How's that sound?
Yeah, okay.
All right, well, let's do that.
All right.
Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. And in the last segment, we were talking about some different stock analysis with Citigroup, and we started off with Apple, and we had a lot of people texting in for this free investing class by texting the word investing to the number 210. Congratulations to those that did that. And if you do have some stocks that you want us to analyze in the next couple of weeks here, make sure to do that. And as we go through that in the next couple of weeks, we'll try to analyze that. Hopefully it's an OTA pick. That way we can just go right off of that, one of the services that Online Trading Academy has. Make sure to check out the live YouTube stream. You can just go to YouTube, go to Josh Lilquist, or Investing and Trading Live on the podcast, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. So, Al, as I was talking about in that last segment, we started analyzing Apple.
Right.
Okay. And Apple's at roughly $145 per share, depending on when you're listening to the show here. And it's at $153 per share, depending on when you listen to the show here. But there's a lot of people that are like, hey, I don't have enough money to buy Apple. I'm priced out of the market. And then they feel overwhelmed because they can't do it. There's other avenues to be able to get into Apple and at a discount. Explain that a little bit.
Yeah, one of the problems with the current price of some of these companies is that it keeps a lot of people out of that particular investment. And some of those companies like Apple, Tesla, NVIDIA, Costco, even at $400 a share, some of those are so expensive that it keeps people out of them, but they may be some of the best moving stocks, maybe some of the best investments. So how can you participate? Well, it's sort of like an online discount store. It's called options, and you can use options to participate in those stocks for a fraction of what the actual stock would cost. Where something may be Apple, for example, in the $150 range, and there's a number of different options. And we kind of go into the differences in these classes, but there may be some options that you could get into for just a few $100s to control 100 shares of Apple. Each option contract controls 100 shares of the underlying stock or the underlying asset. But it allows people that either don't have a lot of money to participate in stocks that typically are very high priced, and it also allows people maybe that have a lot of money but just want to take a small amount of it and invest in the market. But you can do it with a fraction of what the cost is, and then also the potential returns, the rate of return is extremely beneficial. Kind of a rule of thumb with options is if the underlying stock is up 10%, the option should be up about 100% or more. So you get some real benefit there, but it allows you to take a small amount of money and participate in something that is a much higher investment.
Yeah, you had me kind of thinking about a conversation that I was having with a good friend. I believe it was last week, and they're like, I want to get in the markets, but I don't have $15,000, $20,000, $30,000. They want to use a little bit less capital. And I said, great. I said, well, what can you get started with? Well, I don't want to risk a lot of money, so I can do $1,000. And so, well, it's going to be kind of tough to do that, but you have the buying power. So what their thought process is if they put $1,000 to trade with into an account, they thought that whole $1,000 was at risk, which it's not when you do it the right way. So let's just say, for example, you were talking about 100 shares of Apple. If Apple's at $153 per share, that would be $15,000 and $15,300
in one position.
In one position, that's with the stock.
Right.
So that's why people have that mindset of they feel they're risking whatever they have in the account, which is very risky. We want to minimize risk, and that's what options will do. Options actually were designed to minimize risk.
Correct.
So if you were to do one option on that, I know we don't have an options chain up, but what's a potential example of what your risk might be on an option rather than the whole thing with the stock?
Yeah, instead of $15,000, your total risk might be just a couple $100, or depending on the option. Again, there are a number of different things to consider there, but it could be just a few $100.
Correct. So you're minimizing your risk in the market. So let's just say, for example, an investor has $10,000 in an account. So rather than using that whole $10,000, which is what you would do with stocks, potentially do the option, which maybe you're only using a few hundred, and maybe you're tying up maybe 1,000 or something of that, so you're not risking all that money. That's how you minimize that risk. And I know you talk about that a lot in these investing classes that we do here locally. So make sure to text in for one of these investing classes by texting investing to the number 210-210. That's text investing to the number 210-210 for 2 seats for that class.
Yeah, well, one of the things that it also allows you to do, because you're putting smaller amounts of money into a position, is to be more diversified.
Yeah.
So instead of having one or two stock positions, or maybe even 4 or 5 stock positions, you can have several different positions with that smaller amount of money, and you can use options to actually participate in assets that are not necessarily correlated to each other. I mean, the S&P 500, for example, is made up of 11 different sectors, and each sector has what we call an exchange-traded fund, an ETF, that mimics that sector. So you have the opportunity to maybe participate in commodities or in consumer discretionary, consumer staples, healthcare, technology, all those different things.
Yep.
This allows people to have a more diversified portfolio using less money.
Yeah, so essentially you're capital efficient.
Correct.
The concept is very similar to like a mortgage on a house, right? With a mortgage, even if you have, let's just say, $500,000 to purchase a house, most people still don't purchase that house with cash. They use a mortgage, which allows you to be more diversified with the rest of your money. So maybe a $50,000 down payment, you own that house technically. And, well, technically you don't, but it doesn't matter, which is the same with options, right? And stocks. So you control that house with a smaller amount of capital. You can still use that other money to, let's just say, to invest with. Sure. Same thing with options. Rather than putting all your money into a stock, use less capital, be more efficient with that, and then have more opportunities for an income strategy, especially if you're looking for a backup plan.
Right.
We have a lot of layoffs that are happening right now. People need a backup plan.
Yeah, a lot of companies are laying off, and we may be heading into a recession. I would say the majority of the analysts out there think we probably will. If we go into a recession, there'll be more layoffs because unemployment increases during recessions. There's this thing called artificial intelligence that's going to impact a lot of careers out there. But I'm glad you used that analogy of a mortgage. So let's say that you actually buy that house with a mortgage. So you put a small amount down. You now control a much bigger investment. Now, what's one thing you have to buy for the house?
insurance.
You got to buy insurance. Options can be used as an insurance. So not only can you do this, use it as a leverage to control something for a lot less money, but now you can also use options as protection. You can use it for protection on something you own, stocks that you own, for example. You can protect them with options. You can actually, it's almost like insuring your neighbor's house. You don't even have to own an asset to use this same strategy.
Boy, now
to
we're getting in the weeds here, Al. I know you talk about that in these investing classes. But I want to. We're getting close to a break here, and I want to dissect a little bit more of that insurance. Essentially that insurance policy on your portfolio, because we have, markets. Obviously, people are looking at their portfolios now, and they're concerned. Why am I losing so much money in my 401k and my IRA, and I'm not even doing anything? Right. So we're seeing more people want to take more action and be able to protect their life savings. And I want you to dissect that in the next segment here. Also, I want to get into some more income strategies as well, which I'll talk about here in a second. But if you have some stocks that you want to analyze on the show in the next couple weeks here, text in right now. So text the word investing to the number 210-210. After that word investing, just put the stock in there. So text investing to 210-210 and Apple or Citigroup or Google, whatever that stock you want to look at. We'll make sure to get you a call, and that way you can tell us what you want us to look at here, whether it's a short-term potential trade or a long-term potential opportunity, and then we can analyze that for you in the next coming shows here. And you can also, if you missed the show, you can always check out the YouTube. You can just go to YouTube and type in Josh Lillquist, or you can go to Investing Trading Live on the podcast. But so text investing to the number 210-210 with that stock pick after that. So we also have these investing classes, Al, that you've been teaching a lot of these, and we've been having a lot of people coming to these classes, and they're looking for that backup plan. Right. As you mentioned, potential recession, layoffs. You're seeing layoffs in the tech sector. I mean, you're seeing that everywhere right now, and people want that backup plan. So if that does happen, you're not stuck to nothing, or unenjoyment is what we used to call it in my construction days. We get laid off in the wintertime and you'd be unemployed.
Right.
It would be called unenjoyment. So rather than just relying on that small payment, being able to have an income strategy if that happens. Well, hopefully that doesn't happen, and then you have two potential sources. That's how you build wealth. That's how you build retirement accounts as well. So we're going to talk about that coming up here if we get enough time as well. So for this investing class, local at our academy here, text the word investing to the number 210-210 for 2 seats. When you do that, you're going to receive a quick start kit, which actually has these OTA picks that we've been talking about here today. So text the word investing to the number 210-210. Coming up next, we're going to talk about the insurance policy in your portfolio, but also if people are looking for that income strategy, how to use a market like commodities to have that opportunity for that second source. This is Josh and Al, Investing and Trading Live. We will be right back.